nothing is correct 100% of the time, right? So I think that's the most important bit here to kind of, that companies that want to adopt AI kind of need to accept, but that's fine, right? Nothing is kind of ever 100% of the time correct. And those are non-deterministic systems, and humans make a lot of mistakes. So really the real question is, can you create a significant uplift on the quality that a human can produce? Because then you can make an argument, look, I'm automating this process, but it's much faster. The customer gets a loan or mortgage decision instantly, or like close to real time. It's also a lot more compliant because you can objectively show that your process complies a lot more often with a set out standard and policy. So, and really the way you're treating it, we typically start on a project and we say, okay, the human team is the benchmark. What we want to do it significantly better than the current benchmark.
This is the FinTech One-on-One podcast, the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. My guest today is Dimitri Masin, co-founder and CEO of Gradient Labs, a company building autonomous AI agents for customer operations in financial services. Dimitri was one of the first 30 employees at Monzo, where he led AI and data science from day one and watched the bank grow from 30 to 4,000 people. In our conversation, we talk about why the real opportunity in banking is automating the manual operational work behind the scenes, not just the app experience. We get into why co-pilots can actually degrade quality and compliance, and why Dimitri believes full autonomy is the safer path. He shares the story behind what may be the largest known AI agent deployment in banking, serving millions of customers. We also cover why banks aren't seeing productivity gains, his 5 to 10 year view on the transformation, and how the US bake-off culture plays to his advantage. Now let's get on with the show. Welcome to the podcast, Dimitri.
Thank you, Peter. Nice to be here.
Great to have you. So let's get started by giving listeners a little bit of background about yourself. I know that you've worked at Google and you were early at Monzo. Tell us a little bit about what you've done in your career to date.
Yeah, amazing. Let's start with Monzo. That's probably the most exciting part. I joined them quite early on, probably as one of the first 30 people, and was kind of lucky to bet on the right horse, to be honest. I mean, nobody can predict which companies will succeed in the end, but Monzo was a very, very successful bet. And I joined them really to lead all things AI and data science from day one. And I spent there 7 or 8 years literally building the bank from 30 people up to 4,000 people, I think, by the time I left. And so really kind of had an amazing experience throughout those 7 years, kind of looking into every single area of the bank very deeply and kind of understanding how banks work from the ground up and kind of building one yourself. It was an amazing experience.
That's great, yeah. And Monzo, obviously one of the most successful UK digital banks. They've tried to make it here in the US and haven't really been successful. But so then what was it that you saw? Like, you were still at Monzo, I believe, when you had the idea for Gradient Labs. What was the thing that needed addressing?
That's a great question. I think retrospectively, if I look at this, there's obviously this big transformation that fintechs were trying to achieve in financial services, right? So they kind of introduced the kind of at your fingertips, amazing flawless experiences where you can really bank just by a few taps on your mobile phone, whereas previously you would need to go into a branch or like call somebody up, which is even worse probably. And really fintechs, like the whole purpose behind fintechs like Monzo were to reinvent that experience, to make it really amazing. And I think what most of those companies, though, like Monzo and many others, have realized is that while you could reinvent the happy pass and the experience and kind of create very slick apps and a very good customer support, for example, really a big part of the financial services organization could not be solved very easily. And that's kind of the manual, repetitive operations, let's call it customer operations behind the scenes, that kind of is needed to run any financial services organization. That part kind of remained the same, right? So in every larger retail bank, you would have probably more than half of the staff really responsible for keeping the lights on of accounts behind the scenes. And even those fintechs were tech first, that part, i.e. the customer operations, and by the way, when I say customer operations, I mean things like customer support, AML, fraud investigations, KYC, onboarding, screening. So really all the processes that are needed to make a bank work, they were pretty much not reinvented. So they were like fairly similar to how they were before. And at the beginning of 2023, when GPT-4 came around, it became very, very clear to us that that part of the problem, i.e. the second half of the transformation of financial services to like a very slick modern experiences, is now possible as well. So the first leg was putting your experience into the app, make everything very nice and easy. And the second part of the transformation is almost like now creating a significantly more scalable, more efficient organization by doing all of the customer operational work in a much more efficient and much more delightful way for the customers.
So you started the company, I believe, with two other co-founders, all from Monzo. What did you kind of bring from your time at Monzo that really helped you get this off the ground?
Both of my co-founders, Neeland and I, who are both amazing, they were part of my wider team as well at Monzo. So I knew them amazingly well. We worked together for many, many years. And so we really kind of decided together to build a new company. And really what triggered it is that we were very, very deep in automating customer operations processes, right? And like probably in every other bank, we kind of had our successes doing like achieving 10% efficiency gains here and there. But then we acquired essentially very deep expertise of how everything works under the hood. And then, as I mentioned, when GPT-4 came around at the beginning of 2023, we essentially realized that this whole area will be completely reinvented over the next 5 to 10 years. And so we want to drive that change in the industry and hence kind of started Gradient Labs, which is focusing on kind of, if you wish, in a nutshell, putting banks on autopilot, i.e. creating almost like a customer operations platform where you can write down your processes and procedures and they will be executed by AI agents in a completely autonomous way, but as safe as humans, or ideally much safer than human teams can, but also with much better customer experience at the end.
Okay, so then take us through that. If we could go a little bit deeper there, like when you're in conversations with banks, are you selling a suite of tools that are sort of AI agents can go out and do those things? Or is it, what are you actually providing to the market?
I think the closest analogy probably would be, if you think about the human operator's role within the customer operation system, right? So like if you want to, let's take a KYC process, there will typically be some KYC system already in place that does straight through processes for the majority of the accounts. But then there will be, let's say, 15% of cases which cannot be straight through process because they need to look deeper at, maybe there's like a PEP or sanction suspicious, and you really need to investigate that account. And typically you would have a human team that kind of looks at this exception case and does all the manual works, goes to different websites, maybe apply some decisioning metrics on the information that they're gathering. And the way to think about us is essentially we're trying to mimic how humans work within the operations teams today. So we're assuming that all the existing systems, source of truth or system of records rather, are staying and are as they are today. But then the way, if you think about how human operator works, they go from system to system, collect data here and here to complete an end-to-end workflow with a particular purpose, like KYC exception handling. And that's exactly how we try to mimic it. So we essentially sit on top of the existing system, and you can think about us like an orchestration layer of end-to-end workflows across those different systems.
I know Monzo is one of your clients. I read about that. What are they actually doing? And do you have any kind of metrics or something that you can share about how much they're improving their efficiency?
I can't talk about Monzo, but I'm happy to talk about many of the other customers. So the primary motivation of working with us by any of those customers, you would think maybe is cost cutting, but it's actually not. I think the primary motivation is typically to improve customer experience. And what we were able to show in every single deployment so far, and that's literally, we have about 30 customers within fintech and financial services space that we're working with. And in every single deployment, you can achieve a significantly better customer experience in support, for example, in customer service and customer support, than the human team can provide. So typically you see an uplift of around 15% on top of whatever the human team can achieve in that organization through automation of AI agents, through AI agents. So really, for most customers that we're working with, they primarily care about improving customer experience, but also making them more scalable because most of them are like fast growing fintechs. They want to be able to say like, look, we want to keep headcount steady, but we want to be able to support twice as many customers as through that headcount. And so really kind of being able to scale easier with the same headcount and improved customer experience is what really drives the motivation. On the cost side, frankly, we can go deeper into that. The picture is very nuanced. So I try to kind of educate usually prospects on what they can expect on the cost side. But I would say there, if you do the job really, really well, you can save maybe up to 70% of handling time, operational handling time on a particular process. And if you just scratch the surface and do like the bare minimum, maybe you save like 20%. So it's not quite a step change every time.
So then when you're going into a bank or a fintech for the first time, and they said, yes, we want to implement, what's that look like? What's sort of the implementation? Tell us a little bit about how long that takes and what's it look like?
So by now we have quite a wide suite of products, right? Because our vision is really to put operations on autopilot. So an operation is like essentially like a long tail of all the kinds of processes within a bank. But every company has usually at any given point in time some sort of focus area or burning pain points that they're focusing on. And so really typically the process starts as we kind of start a conversation and try to uncover what are kind of 2-3 most important bits that really are expensive or somehow, I don't know, not working well from a customer experience perspective. So an example can be like, we're talking to quite a few lenders, mortgage lenders right now. And one of the key problems is like, it just takes so much time to review a mortgage application, right? Because you need to submit like 20 different documents and whatnot. And really, like for them, it's about like, hey, how do we shorten that time and maybe do it almost like close to real time? Somebody uploads the documents, give us all the information, we can tell them, okay, XYZ is missing, or if nothing is missing, here's an offer type of thing. And so really as a first step, we try to discover what is the most burning thing because our range of services by now is so wide. And then once we kind of narrow down on 2-3 like very specific high value use cases, we essentially say, okay, let's go and try to run a POC. And typically there's also like multiple vendors involved, or like often enough there are multiple vendors involved where you kind of almost like bake off for a particular use case, right? So a bank would try 1 or 2 vendors and compare the performance that they can achieve. That POC phase is typically like 4 weeks. But obviously before the POC stage, you kind of all want to have all the legal work and security diligence work done and so on. So that's kind of probably the longest time. But really the implementation is very, very short. The actual like implementing the product to show that it works is like 4 weeks, initially, at least for the kind of initial rollout. And then it depends how deep you want to go, because typically our motion is we implement the first use case, let's say within the 4 weeks. And then we essentially say, okay, let's implement the second and the third and the fourth, because everything is built on the same platform.
I'm sure you've seen this in the press this year where there's a lot of talk about banks, they're implementing AI and they're not seeing the productivity gains. What do you think is the reason that we're seeing so much talk about AI and the lack of productivity gains?
2-3 years ago, the answer was clear to that as well, but nobody was asking that. Well, maybe because people were not spending so much money on AI. The answer is still the same, and we kind of knew it already back then. So essentially, like the cost efficiencies that you can create, i.e. productivity, is kind of very much related, has a fairly like nuanced view. So copilots, most of the banks implement copilots. Copilots are essentially like meant to make current workers faster. And we actually tried to do it at Monzo like years back, even before GPT-4 came around. We essentially were auto-suggesting responses to people in the front line to kind of reply back to the customers. An interesting learning back then was already that if you do that, 2 things can happen. Either kind of people use those replies and not necessarily open a new chat and kind of work faster, but they maybe just like do something else. So unless you adjust their targets as well and everything else around them, because it's a complex human system, you might not actually even able to see that they're doing more responses or chats per hour, let's say, or per a time frame. So that was one thing. So you kind of need to adjust the whole system, and that's not trivial. It's not just giving them a tool. But a second thing, which is maybe even more interesting, is that it has an interest, copilots have an interesting effect. If they're like 90% of the time correct, what tends to happen is that people start just accepting blindly what it suggests. And so it might be fine in 90% of the cases, but in 10% of the cases, it will be wrong. And so what we started seeing and what we experienced with our customers is that if you do that, you actually degrade the quality of the service and the compliance that you will achieve, which is counterintuitive, right? So you wouldn't guess it, but we have seen it firsthand. And so that's why the core decision for us when we were building Ready Labs was like, okay, we actually have seen firsthand that Copilot degrade the quality of the experience and degrade the compliance rate because people just at some point start accepting. What the real solution is in our minds is like complete autonomous kind of autopilot, end-to-end automation, which doesn't require a human in the loop. But if you want to do that, you obviously need to convince many, many different parties that it's safe to do. You need to have the right controls in place. You need to have a way to kind of roll it out very safely. So you need to think a lot about the controls that you need to have in place in order to have a fully autonomous system. But now we essentially, for the last 3 years, we have spent the last 3 years proving that full autonomy is safer and higher quality than copilots.
So then, how are you ensuring that your AI agents are correct 100% of the time?
The answer here is nothing is correct 100% of the time, right? So I think that's the most important bit here to kind of that companies that want to adopt AI kind of need to accept, but that's fine, right? Nothing is kind of ever 100% of the time correct. And those are non-deterministic systems and humans make a lot of mistakes. So really the real question is, can you create a significant uplift on the quality that a human can produce? Because then you can make an argument, look, I'm automating this process, but it's much faster. The customer gets a loan or mortgage decision instantly or like close to real time. It's also a lot more compliant because you can objectively show that your process complies a lot more often with a set out standard and policy. So, and really the way you're treating it, we typically start on the project and we say, okay, the human team is a benchmark. What we want to do it significantly better than the current benchmark. And this way, hopefully your chief risk officer and your governance team will be happy, the regulator will be more happy, and the end customers will typically be happy because something will be also in it for them because it's going to be much faster, much clearer, and so on. So really, like, the answer here is to benchmark it to the current human team because that's kind of the work that you're replacing rather than expecting a completely 100% true and accurate solution.
When you're then implementing this end-to-end autonomous solution, what do the people that used to do that manually do? And what have you found at the implementations that you've done? How are they utilizing the employees that used to run these tasks?
I think the first assumption would be, there must be like layoffs happening because of that. Actually, the counterintuitive truth is that none of the companies we have worked with actually planned or laid off any people in that space, which is maybe like counterintuitive at first. But in most cases, companies redeploying those people to create better customer experiences for their customers, right? So sometimes it's services that they didn't provide before. So for example, you might have an account manager from a certain size of the account, and that threshold kind of goes down. Or you spend more time actually investigating more complex issues or dealing with cases which require a lot more human empathy, like financial difficulties and vulnerability. So in reality, for every single customer of ours, typically the teams got relocated on slightly more complex, more difficult, more customer-centric tasks in every possible case.
So I want to dive into something I read about, which I was really interested in to get your take here. It was described in the article I read as the largest known AI agent deployment in banking, handling nearly 500,000 users with quality that beat the bank's own human agents. So what can you tell us about this largest known AI agent deployment?
Well, I think what's worth noting that I can't obviously tell the name, that's why, otherwise we would have disclosed it in the article. But essentially at some point at the beginning of 2025, it was already more than a year ago, in January, we have realized we have actually had the first full-scale AI agent deployment with one of the largest regulated banks in the UK. And at some point, we kind of just glassed over it. We didn't even clock it. But at some point, it's like, hey, there's literally no other large regulated bank who would have deployed it at full scale to their customers. And we started kind of writing and talking about it because it was the first, at least the ones that I would know about. Most large regulated banks with tech teams would have kind of played with AI agents here and there, or like have niche cases automated. But in this particular case, it was really deployed to like 12 or 15 million customers. And throughout the process, obviously, like we needed to jump through a lot of hoops to kind of prove that it's going to be safe and working well. But in the end, we have realized that the customer experience through doing that has significantly improved for this particular bank. So I think it was like 15% difference or better than the human team, the human average team in that particular bank previously. So it was really kind of overall a full-on success story. And we started really beating the drum about it because we realized, oh my God, this is literally like the first bank and everyone is trying to do that. And we actually had one at full scale.
I was at New York FinTech Week in April, and I was listening to a panel with a bunch of the largest banks in the US. And it was interesting because they said that they're all doing pilots right now. And these are obviously very big, complicated institutions that do things very carefully. But what was interesting to me, and I'd love to get your take on this, is that they said right now we're doing pilots. And then someone asked the question, okay, in 2 years' time, what percentage of the bank's processes will be done by AI agents? And they said 50%. And right now it's 0. So that seemed to me like to be a little bit optimistic. What's your take?
I'm pretty sure it's a bit too optimistic. I mean, we're at it now for 3 years, and it's worth saying that the core technology that needed to unlock that use case was there at the beginning of 2023. Really, GPT-4 was powerful enough to do that use case well, right? So it's like whenever the frontier models improve now, it doesn't necessarily drive too much or like gain or improvement in the products like ours, because like the operation space is like, you don't need a PhD LLM model to do that, right? So really what's happening is that even though the product is there and some companies, especially fintechs at the beginning, have proved that it can be very safe or like safer than human, more compliant than human, and create much better experience. And yet you wouldn't say that every bank has somehow adopted it, even though those products exist. And I think it's more about the kind of technological diffusion and how decisions and things happen in those companies, right? To give you actually a very, very specific example, that happens very frequently and like more recently even started to happen more frequently. So the typical decision, or like the typical conversation that I had with fintechs or banks probably like 1.5 years ago, 1 year ago, was like, especially tier 1, tier 2 banks, is like, we're definitely going to build it ourselves. We have thousands of engineers. Like, why would we ever partner with somebody else? We're just going to build it. We can build anything. That was typical answer. And then I think typically companies have spent maybe a year or 18 months on running pilots and have in many cases learned that while they can build something internally, the technology is evolving so fast that it's almost impossible to keep up with specialized providers and vendors who are essentially just doing that one thing. And so essentially, even companies who build themselves are realizing, okay, we are nowhere close to the frontier capability, to the safety that you can achieve through some of the providers that are out there. And so really the situation started to flip probably at the beginning of this year, where I've started like seeing the first cases where like, okay, we have done it for 12 or 18 months. We are now realizing that we either invest hundreds of people to do it properly, to keep up with the technological change, which is really kind of happening every 2 months, or we are building infrastructure in such a way that enables us to plug in the best agent providers from the outside in a safe and easy way into our infrastructure. This way we can kind of bet on the best provider. And if they're not the best anymore, we can switch them out for something else. But we really, as a bank, we're going to build the core infrastructure to be able to plug those providers in. So that's kind of the mindset shift that happened. My answer is, it wasn't like a straight pass or just build, deploy, and it works. It's like a bit of a zigzag where like you try one thing, you realize after a year, oh, I didn't quite yield results. Now I'm trying something else.
Right. So 2 years may be optimistic, but I'm guessing you think like 5 years is probably pessimistic, right?
Well, for me, like when I talk about it, I talk about the 5 to 10 years time horizon where the like larger scale transformation will happen. Even on the support side, right? So like to give you an anecdote, support side like customer support, customer servicing is the easiest use case that we started with 3 years ago, right? So that's kind of what you start with typically. Because like for most people, they perceive that, oh, it's just like a ChatGPT style application. So what could go wrong? That's kind of the easiest application. And there it has a very interesting dynamic, right? So if you look at all the customer support, even with kind of companies that we're working with, you can automate fairly quickly 50% of all the inbound queries that customers are contacting you with, let's say on the calls or via chat. But those 50% of the queries that you're automating actually yield roughly 20% of the time savings that you achieve through that. So what it means is that just like those 50% of the queries that you're automating are just the easiest ones anyways, that would have taken the human very, very quickly to resolve as well. And so really you automate half of the tickets, but only 20% saved only 20% of the time. And so really the crux of the problem is essentially like, how do you automate the remaining 50%? And we're doing it with a few very large customers today. And we are on the journey from 50 to 80 or 50 to 90 already like for close to a year. And they are like fast running tech forward companies. And it still takes a year to go from 50% to 80%, where you really kind of see step changes. So based on that, and that's the easiest possible case, right? So, and now if you kind of take a step back and say, okay, customer support is the easiest possible case, but like there are all kinds of like heavier compliance processes, like, I don't know, money laundering reviews or like account freezes and things like that. Like they're a lot harder to automate. And if you like actually go after the long tail of all those things, I can't see it to take 2 years. Like it just, even for the easiest stuff, it takes already a year. And you're like maybe automating 5% of all the operations in a bank. So really 5 to 10 years is for me the horizon. Not because the technology is not there. Technology is there already. It's about the kind of technological diffusion and how organizations move and adapt is where the bottleneck is, I think.
Okay, so you're based in London, but you have been here in the US, I believe, for almost a year, and you already have some fairly big-name fintech customers, Current and Stash, both seem to be publicly named customers of yours. So what's the plan here in the US?
So US is a pretty big market. It's a very interesting one because it has fairly large fintechs, right? And that's kind of our one of the ICP segments. It is also interesting from a perspective that US fintechs buying slightly differently. So there's like this difference between US and Europe. In the US, I found that companies are a lot more performance oriented. So essentially they do those bake-offs, essentially. Like when we are talking to big, large kind of fintechs in the US, they say, oh, we're going to try 2, 3, maybe even 4 providers sometimes. And so they are thinking about is like, okay, what is the infrastructure that needs to be in place for us to test as many providers as quickly as possible? Because they have learned that it's very, very difficult to evaluate providers as a tabletop exercise. Because kind of 90% of the agentic work is kind of hidden below the surface, right? So you don't know how it's going to do in the wild before you actually try it out. And so they made it all about like bake-offs. And that actually suits us particularly well because so far, because we are such a specialized provider, we serve only fintechs and only financial services, we actually have won every single bake-off that we run against any other company. So that suits us very well. So that's why we are going after the US market, because we actually want to have bake-offs. Because whenever we have a bake-off, we know that we can win. Where it's harder for us is because we are a smaller brand, because we are like niche and vertically focused. We obviously don't have like a large tech brand. So it's harder to get into the door, but once we're in, we always win on the technical merits. So from that perspective, US market is a very interesting one for us, because in Europe, you typically pick one provider and kind of go with them and hope for the best. Whereas US, not always, but many times, but in the US, like the bake-off is a standard mode.
Okay, so then last question. What's your vision for Gradient Labs? I mean, the opportunity seems monstrously large, but what's your vision?
Oh, no, 100%. Like in a nutshell, like if you think about putting a bank on autopilot, essentially making it significantly easier to operate and kind of reinventing the whole industry and how it works today, that would be quite something to achieve, right? Because that's what drives me every day. So I kind of think about like transition from traditional banking to fintechs. That was kind of the first leg of the journey. And the second leg of the journey is like transforming how companies or banks operate from the ground up and making it infinitely scalable. That's kind of where the time is going, where the trend is going, and that's what we want to be driving, right? So we want to invent that future or drive that future, build towards that future. That's what we are building.
It really is interesting. I mean, you are at the absolute cutting edge of technological change here in financial services, and really interesting learning more about your company, Dimitri. And thanks so much for coming on the show, and best of luck.
Amazing. Thanks a lot, Peter, for having me.
Every day we hear news about one large company or another doing a round of layoffs in response to AI automation. That is why I was so interested in Dimitri's answer when I asked what happens to the people who used to do this work manually at their fintech and bank clients. He said not one of his customers has actually cut staff in that space. Instead, they redeploy people to the harder, more human-centric work, the complex investigations, the cases involving financial difficulty and vulnerability. It's a useful counterpoint to the doom narrative around AI and jobs, at least for now. Whether that holds as automation continues to improve remains to be seen, but it is quite possible this doom narrative is overblown. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.